How does Qurtuba financing compare to bank financing?
Interesting question, because uh, most people uh, they want to have Sharia compliant financing, and that's why Qurtuba was created. So there are many of our members who say that this comparison should not be made because it has nothing to do with what we want to achieve. However, it is human nature, and people all the time do compare to see whether they are in fact gaining because they are members of the Muslim community or they are losing. And the unfortunate thing is that you require a basic understanding of finance to be able to compare. So most of the time when they compare, they are not doing it right. And I will explain why. Uh, Qurtuba is offering a product that does not exist in the banks, in the commercial market. It is unique because it is completely flexible. And flexibility has a cost. So if a bank was offering a product like that, it would be very expensive. So what we end up comparing is a very inflexible arrangement with the bank versus a very flexible arrangement with Qurtuba, and that is why the comparison is unfair. But I will explain that currently a 5-year mortgage can be obtained for something like between 3 and 5%, whereas the rental rate that was established by looking at the rental market in Montreal is 7.5%. In fact, we apply it also to other places in Quebec. And because the house prices may be lower in other places, the 7.5% gives a lower rent. Now, if you look at this rate, then 7.5% appears more expensive. And of course, there were times when the commercial rate in banks was 12%. At that time, 7.5% looked very attractive, and we had a huge demand of people wanting to. Unfortunately, we didn't have the financing available to finance everyone. In fact, there has been a time when the mortgage rates were 18%. There are times of low when there's a recession or when the government wants to give help the economy by helping people to buy more homes, then the rates are low. And therefore these rates keep changing, but the rental rate is very stable and we have not changed it for 20 years. So one thing is to understand is that it is not a decision that was made by management or by a consensus of the members. This decision was made by studying the rental market, and the Musharika model says that Muslims can charge a profit for providing goods and services, but they cannot charge any profit for giving a financial loan. So because the housing co-op is providing housing services, it can charge a profit, and the profit must be based on what is happening in the market. So if we do another survey and see if it is still 7.5%, maybe it is a bit lower now and we will lower it, and maybe it is higher, then we will be obliged to raise it because we are trying to reflect the actual market rates for housing services. Therefore, this is a decision that is not made by management, and we cannot just arbitrarily reduce it. But what people don't understand is that if you go to a bank and you ask for a 2-year mortgage, the rate will be lower. If you ask for a 5-year mortgage, the rate will be higher. Why? Because the interest rates might change, but the bank is obliged to give you the same rate for 5 years. So the bank has some risk, so they increase it. If you increase it to 7 years, the bank will charge even more. There's no such thing as a 16-year mortgage that we are providing. Of course, we don't call it a mortgage, it's a Sharia arrangement, 16-year financing, and it's fixed. So if there was a product like that in the bank, they would add a lot of percentages to what they are selling. And when you're going to buy a 3-year or 5-year mortgage, you don't know at the end what will be the interest rate. So that is one reason why we should not compare. The other thing is that we have huge amount of flexibility because we don't consider our members as our commercial clients. We consider them our brothers, members of our community, and we have created this organization entirely to serve them. So members have the possibility to reduce the payments or suspend payments or even liquidate the share certificates and get money back that they have already given. Nothing of this is possible with a bank. And if there was, the rate of interest would go up. Another thing that the banks have is that if you have an open mortgage, it costs more than a closed mortgage. So in a closed mortgage, you cannot pay off more than a certain amount. In an open mortgage, you can pay out any amount anytime, and you can pay off the whole house very quickly. If you want an open mortgage, the banks will increase the rate. And if you have a very long term, they don't give you open mortgage. But here, you have a 16-year rate, you have an open mortgage, you can pay off, some people have paid off in 5 years. So you can pay any amount anytime, and if there's sickness or you lose your job, you can either reduce or suspend payments. So all this flexibility makes it very, very attractive and totally not reasonable to compare it with bank mortgages.
Okay, can you explain the details about reducing or suspending?
Yes, if somebody has a problem, they just come and talk to us what their problem is, and without going to any notary or anything, we just make an arrangement with them to reduce the payment. And as long as they are paying back some capital, even a very small capital, and they're paying the rent, they're okay. However, if they want to suspend payments because there's a crisis, we permit that to do them as well.
For how long?
It goes from case to case, but our concern is always to help the member. If a member suspended his payment for a long time, because let's say he lost a job, and then he was not able to find it after 1 year or 18 months. At that time, the member can ask us to sell the house, and we give him back his investment. So we give him a good time to look for another job.
This is another point to compare with banks, because in the banks they put the house in the sale and he get nothing, but in Qurtuba, when the house is sold, he get back his money that he paid.
He will always get back his money.